What's going on, guys? Let's cover a little bit of today's price action. So today, a little bit choppy. We are pulling back just a tad. I want to kind of talk about that and discuss, why that's happening. So I think early in the session, which, sometimes seems to be a little bit more of the norm. Either you get beautiful trades off the open or you get absolutely nothing off the open, and then the bigger move happens later on in the day. Here's my opinion based on my experience. If you manage to catch a trade early in the session and the market is moving off momentum, that's typically the best time to just walk away. Because a lot of times traders will look at it like, wow, I made money very early in the day. If I just kind of sit around and continue to take trades, I'm going to make so much more cash. And then typically the market starts to chop around. You start to give back profits. It's never really a good thing. So just maybe make it a personal rule. A rule of thumb: if you make money inside the first 30 minutes, the first 45 minutes, walk away. Your day is done. If you notice that you didn't really get a setup in the first 30 minutes, the first hour, kind of sit around, be patient, and wait for that move coming into lunch or out of lunch. And then that might be the time where you can walk away. Now, just kind of looking at today's price action, why are we kind of pulling back just a tad? Why is it a little bit more choppy? Well, if you think about it, all-time highs. And I've made this comment before, but it's very, very difficult to trade all-time highs because of the fact of price discovery. Price is trying to figure out where is the new support, where's the new resistance. There's not a whole lot ahead of us. We are, if you're looking at this chart, if we're looking at this daily chart, you're at the upper portion of this range in terms of my linear regression channels. So the top linear regression channel is literally sitting up here at 25,200. Okay, so we're about 150 points, give or take some range, away from that. We came and we started all the way from 23,000. Okay, so if you notice this sort of, I call it a triple bottom zone, here, here, and here, we bounced off this rising 50 SMA on the daily chart. Very, very strong. Okay, so the 50 SMA was acting as a super, super duper strong level of demand. And realistically, since September the 3rd, we haven't had as much as a downtick, right? Now, it's not been screaming up 500 points a day, but the red days are far few in between. And we really haven't closed a candle body below a previous day low in quite some time. And in fact, since, September the 3rd, September the 4th, we've been power trending over our daily 5 SMA. So looking for the buy opportunities off of the dips, maybe off of the 1 hour time frame, or maybe off of a 5-minute time frame. The 200 SMA might be something suitable. Now, going forward, I think we still have a little bit more room to go. The question is going to be is, do we backtest 24,800 before touching 25,200, or we just kind of consolidate here, put in an inside bar day, and then come into tomorrow or Thursday where we kind of take out yesterday's high. Yesterday's high is sitting at 25,027. Look for that area, 25,027. If we take that out, we're going to, kind of continue to roll into 25,120 and then that 25,200. So keep that in mind. Now let's look at the 5-minute chart very, very quickly. If you kind of look at where we're at today, if you go back to that narrative, well, buy the dip off of the maybe a 200 or a 50 SMA. Well, in today's case and scenario, we're trading below the 200 and below the 50 SMA on a 5-minute time frame. So what is that telling you? That's telling you there's not really a buy the dip opportunity. In fact, it's acting more as supply. We need to be shorting some of these pops. So if you look at off the open, we lost a linear regression channel, we popped back up to it, and we got rejected. You want to short the pops back down. In this particular case, we bounced for quite some time, got very, very choppy for a lengthy period of time from about 10 a.m. Eastern time, the top of the hour, and we kind of chopped all the way around for about 40 minutes into the declining 20 SMA and got rejected. Again, here's another bit of a bounce towards the lows here, where we bounced into this Bollinger Band as well as the 50 EMA, and then we got rejected. Here's the sweep of the low of day, finally get that nice sweep in, and now we're starting to get a little bit of a retracement here. Closing over the 20 SMA, maybe third time, fourth time is a charm here. Maybe the market wants to continue to chop up, but we do have supply sitting at 24,960, 24,967, 24,974. So there's not a whole lot of things you can do to the long side unless you're kind of using the low of day as a stop and you're sitting in this for a little bit of a longer trade. If you are looking for a little bit of a scalp, you've got room to about 960, 975. Again, can be a little bit dangerous because each time that we've kind of come to the upper portion of the day's range since we started this consolidation, it's been getting rejected. I don't really see the longs having any leg to stand on until they start reclaiming 24,990. Okay, so 24,990 would be a fantastic spot if we can close, meaning break, hold, retest, and then confirm would be a perfect spot to start to go long. If not, you're looking at rejection spots at 24,966 and 24,990s. You're looking at those rejection spots to play back down into the lower portion of this range. So all in all, be a little bit more patient, right? Be a little bit more patient. Put on those scalps, get in, get out. This is not really the type of price action where you're going to put on a trade and look for 50, 60, 70, 80 point moves. In fact, these are periods of time where you want to put on maybe a little bit heavier size, but look for very, very quick moves. In consolidation periods like this, it's not necessarily that you're on the wrong side of the trade. It's just you're looking for too much range in not that type of environment. So what I actually like to do in these type of situations is maybe, if your average position size is 3 or 4 micros, maybe bump it up 5, 6, 7 micros. Instead of looking for 15 points, 20 points, maybe you're looking for 10 points. Instead of looking for 10 points, maybe you're looking for 5. Instead of looking for 5 points and you're playing heavier size, let's say, for example, you're trading a mini. Instead of looking for 5 points, maybe look for 3.5, right? 4 points. Just get in, secure the gains, walk away. A lot of times what happens is traders, they start going into profit. They're up 10 points, 12 points, and they now start wanting to hold for this could be the move mentality, and they move their stop loss to break even, or they keep it just shy, and they go from being up $200, $300 to all of a sudden now that's break even, and now they just chop themselves up. So you don't want to chop yourself up. If you get a quick $100, take the $100. If you get a quick $80, take the $80. If you get a quick $50, take the $50. If you can do that 2 or 3 times a day, you're doing really well for yourselves. Again, the whole idea here, especially if you're trading prop firms, is just to walk away green. Hopefully you guys took something away from this video. I'll see all of you guys on the trade floor. And again, stay safe out there. Also, guys, Apex 80% off sale ends today. Daytraders.com started a 90% off sale. You can use the code D'Anthony for both of those ones. I'll see you guys on the inside.